So is this the year things finally collapse, or even just return to something a little more normal? Are we going to see a buyer's market in 2022? We'll explore these questions and more in this month's edition of the Vantage Report. My name is AJ Hazy, and I will be coming to you monthly with an expert analysis of the Central Okanagan real estate market. First, let's start with a real quick recap of the 2021 year. Things started out at a blistering pace, and we saw a record-breaking spring. The first half of 2021 was a market like we had never seen before. Buyers and their agents had their work cut out for them as listings were selling in mini auctions to bidders often paying all cash and well above list price. Of course, news of these bidding wars spread quickly, and each new seller with dollar signs in their eyes set out to set a new record. And they'd need to, because if buying again, they'd have the daunting task of being a buyer very soon. Prices were rising noticeably on a month-to-month basis, fueled by extremely cheap interest rates and inward migration due to a newly remote workforce. With every passing month, the supply and demand dynamics got more and more out of balance. Active inventory across all of North America fell to record lows. Now, Kelowna developers did their best to keep up with demand by launching many exciting new developments, all of which sold out in pre-sales for record prices per square foot. Now, despite these efforts, our inventory continued to fall, eventually ended up at 2 months for the first time in, well, ever. Many people then decided they'd take matters into their own hands and build their next home. A once healthy inventory of lots got snapped up quickly, with some people paying over $1 million for a view lot. To make matters worse, as if clients building a new home weren't facing enough challenges with the scarce labor market, we began facing major supply chain issues which extended delivery times and saw pricing on many goods and services inflate to insane heights. As the year wound down, we started to see sales numbers declining, as much as 25% behind the year before. Many started to wonder if this is the beginning of the shift. I know I started to feel it come November, which forced me to do a deep dive into the data. Now, the reason we're seeing the massive drop in sales has nothing to do with a decrease in demand. It's purely a lack of available inventory. With less than 700 active listings in the Central Okanagan, there simply wasn't enough for sale to produce those same record months when we had 1,500 homes on the market and turning over every 60 days. Now, as predicted by year end, the average single family home crested $1 million. That's the benchmark home, now a shade over $1 million, up from a much more affordable $760,000 this time last year. This was a big headline when it happened in Vancouver in 2016, but it didn't create as much fanfare here when it came to pass in December. It's as if people in Kelowna kind of knew it was inevitable. So how'd the year close out? Well, sales for the year were up nearly 30%, and it was a record year. As we got into the fourth quarter, however, sales were behind by 25%, as I mentioned before, and this is due to that 38% drop in active inventory. So despite less sales in November and December, the absorption rate still continued to fall, as you can see, by nearly 20%. This obviously creates upward pressure on prices, with the average condo now over $500,000 and the average townhouse pushing $700,000. Properties are selling faster, of course, with a 42% shortening in the average time to sell, and they're selling for more money, as the average discount of 2.6% a year ago has all but evaporated to less than 0.5%. The average size of properties changing hands has also seen a reversal of the trend, where people were going bigger and bigger before. Now, a 5% contraction in the average square footage points to a serious decline in the affordability. Sales for properties over $1 million did see our biggest jump, with nearly 40%. However, this is not necessarily because the luxury market is still ramping up, as homes over $2 million showed a small decline in sales. No, this really just correlates with the $1 million home becoming the average now in the valley. So with 2021 on the books, the question on everyone's mind is, what does 2022 have in store for us? Well, one thing that's extremely noticeable is that we have not carried anything close to the excitement, exuberance, or even just market momentum into the 2022 new year. The extremely low inventory, the stock market and crypto market volatility, the Omicron with looming lockdowns and ever-changing government mandates have all kind of conspired to take the wind from our sails. Add to that some strong signals that interest rates could start moving up this year. There's a new 7-day cooling off period coming this spring, along with a proposed 1% surtax on houses over $1 million, which is pretty much all of them now. This is all aimed at cooling the market down. So will it have the desired effect? It will all come down to supply. If the threat of this surtax causes people to say, to hell with it, I'm downsizing, and $1 million homes start hitting the market like crazy, and that then collides with a shrinking buyer pool due to increased interest rates and decreased affordability, And the sentiment slowly shifting from greed to fear, it very well could. My personal belief, and take this with a grain of salt please, is that we'll see a rally in the spring. Buyers with rates locked in at all-time lows will meet sellers looking to beat that 7-day cooling off period, and it will create a nice flurry of activity. Afterwards, as we approach summer, I believe we start to see things really normalize. The new rules, the higher rates will have that cooling effect. Sellers trying to time the market will feel the urgency, and enough inventory will soon arrive to give us that balanced market in line with historical averages of 3 to 5 months of inventory. This doesn't mean prices are going to fall, however, as pricing is really a lag indicator and the last thing to change, often on a 12 to 18 month delay. But this will give you a way more sensible market where you have time to think, do your due diligence, and negotiate favorable terms. Now, whether we go into a major correction or a soft landing following this bull run is anyone's guess. Many pundits are predicting some black swan event that creates a full-scale market meltdown, but that's really just pure conjecture. What we know for sure is that Canadians have more equity than ever before. Mortgage default rates are near zero. This means it's nearly impossible to see a 2009-style foreclosure crisis. So my prediction for the 2022 year is a boring old reversion to the mean. The macros remain fairly strong. Kelowna is still a killer place to call home. People will still come here, provided our government doesn't get too carried away. And attractive inventory that's properly priced is still going to have more than its fair share of buyers. Well, there you have it, folks. Keep an eye out next week where I will go a little deeper and offer some tactical advice to both buyers and sellers on how to optimize for this changing market. Should you have any questions that I've left unanswered, or you just want to know more specifically what this all means to your unique situation, please don't hesitate to reply and get in touch. As always, if you want to know what your house might sell for and what you can do to increase that value, you can start that process from right here on the blog. Alternatively, if you want to poke around and see what homes are available, you can start that process right here as well. Thanks so much for watching, and we'll see you in a couple weeks.